Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Southern Co. quarterly report. The Southern Company provides a wide range of businesses and services, including electricity generation, transmission and distribution, natural gas distribution in 4 states, Illinois, Georgia, Virginia, and Tennessee, gas pipeline operations and maintenance, gas storage facility management, gas marketing, services, electric services for retail customers, distributed energy and resilient solutions, digital wireless communications services, fiber optic services, microgrid deployment for commercial, industrial, governmental, and utility customers. The recent surge in Southern Company's stock price can be attributed to several key factors. Firstly, the company has reported robust financial results, with adjusted earnings per share exceeding analyst estimates by 11.9% year-over-year. Additionally, increased electricity demand and customer growth have contributed to the company's success, with a 2.6% rise in retail electricity sales on a weather-normalized basis. Southern Company's significant capital investment plans, totaling $76 billion through 2029, are also driving investor confidence. These investments focus on renewables, grid modernization, and nuclear generation, signaling expected long-term regulated earnings growth. Furthermore, the company's consistent dividend growth has maintained or increased its dividend for 78 consecutive years. The positive analyst outlook and price target adjustments have also played a role in the stock's increase. Several financial analysts, including UBS and Jefferies, have raised their price targets for Southern Company, reflecting increased market confidence. As a result, the company's stock has reached an all-time high of $99.77 USD, indicating strong investor confidence and a successful operational strategy. The primary drivers of revenue growth for companies within the Southern Company system include higher gas cost recovery, base rate increases, and economic growth in their service territory. Additionally, demand growth from large customers such as data centers, increased use of electricity and natural gas due to government incentives, and development of new generating facilities contribute to revenue growth. On the other hand, revenue decline drivers include decreased customer consumption patterns due to general economic conditions and price levels for natural gas, restriction on tax credits for renewable energy projects, and volatility in natural gas prices. Increased competition from alternative energy sources and regulatory changes also contribute to revenue declines. Overall, companies within the Southern Company system face a mix of growth and decline drivers that are influenced by macroeconomic factors, government policies, and technological advancements. Net income and profit margins. A shift in the Southern Company Group. The financial summaries reveal a mixed bag of results for the Southern Company Group, with notable increases and decreases in net income and profit margins. Notable companies that experienced an increase in net income include Alabama Power, $111 million, and Georgia Power, partially offset by dividends paid to Southern Company. On the other hand, Southern Power, minus 34.2% change from Q3 2024, and Mississippi Power, minus 46.6% change from YTD 2024, saw a decrease. Profit margins were affected by various factors, including increased income tax payments at Southern Company Gas and reduced natural gas cost recovery at Southern Company Gas. Some companies experienced a decrease in profit margins, while others saw an increase or no change. The reasons for these changes are multifaceted, with net income influenced by changes in rates and pricing, increased depreciation and amortization, and accelerated depreciation related to wind repowering projects. Profit margin changes were affected by factors such as increased income tax payments and reduced natural gas cost recovery. Overall, the Southern Company Group's financial performance is a complex tapestry of increases and decreases, driven by various market and regulatory factors. The company is generating positive operating cash flow. This can be confirmed through multiple pages of financial data, including net cash provided from operating activities in both 2023 and 2024. The figures show a consistent trend of positive operating cash flow, with amounts ranging from $521 million to $7,615 million across various pages. The company's debt level has undergone significant changes across its various subsidiaries. Notably, Southern Company's long-term debt increased by $2.365 billion to $7.9 billion, while Georgia Power's long-term debt rose by $3.1 billion to $3.1 billion. Alabama Power and Mississippi Power also saw increases in their long-term debt levels. In terms of interest expenses, some subsidiaries experienced significant changes. For instance, Alabama Power's interest expense increased by $6 million, while Georgia Power's interest expense rose by $16 million. However, Southern Company Gas Total's interest expenses remained relatively stable, with no year-over-year change. The data suggests that the company's debt level has increased significantly, which may imply potential increases in interest expenses for some subsidiaries. Nevertheless, it is essential to note that not all companies experienced significant changes in their debt levels or interest expenses. Management is optimistic about the company's outlook, with a focus on long-term growth and profitability. Key strategies include investing in new renewable resources, upgrading existing plants, and repowering facilities to increase capacity. The company will also prioritize operational efficiency and cost management to maintain its competitive edge. In the short term, 2025-2030, the company plans to invest in utility-scale and distributed generation renewable resources, upgrade existing plants, and focus on reliability through a strategic power delivery infrastructure plan. For the long term, 2030-2040, the company will invest in battery energy storage facilities, extend existing power plants, and seek additional renewable resources. Management is also exploring emerging trends in the industry, driven by increasing demand for energy products and services. Overall, management's strategy is centered around driving growth and profitability through strategic investments and operational efficiency, while mitigating potential risks through hedging strategies and evaluating new business opportunities. The company has made several significant transactions through its acquisitions and divestitures. On the acquisition side, the company completed announced deals, acquired 2 facilities with payment obligations until 2026 and 2036, and constructed interconnection facilities for a Southern Power generating facility with reimbursement commitments up to 2040. In terms of divestitures, the company transferred the Kemper County Energy Facility in Mississippi to the Department of Energy, DOE, for property closeout certification and site restoration activities. Additionally, there were intercompany eliminations, totaling $1 million in 2024 and $9 million in 2025. The company has a history of rewarding its shareholders. In recent years, it has paid dividends in both 2024 and 2023, demonstrating its commitment to returning value to investors. Additionally, the company has utilized cash equivalents to purchase back shares, totaling $813 million, as stated on page 114. This strategic move not only boosts shareholder equity, but also reflects the company's confidence in its financial position. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. Specifically, pages 17 and 66 highlight potential issues due to increased materials and supplies, as well as accounts payable and construction payables. Additionally, a significant increase in natural gas costs on page 152 raises further concerns about supply chain disruptions. These factors collectively suggest that inventory buildup and supply chain disruption are pressing concerns that require attention. And that concludes the financial summary for Southern Co. Feel free to comment below, and I will be happy to answer them when possible.